Very good morning to all. Let's start the morning call with some fundamental update. US market closed down at 55 points gain, quite flattish for that matter. Our markets were volatile, obviously due to the RBI policy meeting. Markets actually gave up much of its gain that it made day before yesterday after the policy announcement. There were a couple of things. Obviously, the rates were left unchanged, but that's known to everybody. There are two comments that Street did not like that much. One, on the inflationary side, of course, the inflation targets were increased, citing the fact that agri inflation is a matter of a concern from onion to tomato to rice. All prices have soared up quite a bit, which increases the basket inflation in terms of the food prices. So that's a concern that the governor had. Also, they have increased the likely targeted expected inflation numbers for the full year. That's again something that Street did not like. The other part was the fact that the central banker has asked banks to set aside 10% of their incremental deposit garnered between May 19th and July 28th. So in one way, it's not a CRR thinking. CRR still stands at 4.5%, but it is an incremental CRR that system made, the banking system made from May 19. That portion, 10% of that portion needs to be set aside. So there is a bit of a liquidity sucking that has happened from the market by the RBI. In tune of about $12 billion is what is estimated, which is about roughly 1 lakh crore will move away from the market. What market was concerned was that this will have a direct impact on the NIMs for the banks. Now, our calculation roughly says that depending on where do they park their short-term money, the impact on the NIMs would be hardly about 4 to 5 basis points. So it's a very small impact on NIMs that will happen through this move. This move is targeted more to control the inflationary side of the macros than to hurt banks in any way. I think from a market point of view, the overall outlook still is a little disturbing because the fact that this could lead to a longer period of hawkishness from RBI rather than expectation of a rate cut sooner this year itself, this calendar year itself. So that I think is what is hurting the market sentiment. Also, at the same point in time, you have China, which is preparing itself for more stimulus, and hence the capital allocation could move away from India to China in that case, which is why you would see my sense is that post the RBI policy meet, you would see FII flows being little subdued for Indian equities for a longer period of time. Just two thoughts about it, that market would become very choppy and consolidate at best is what our view is. I think we'll spend some time, about a month or so in this range before taking any direction move, especially when it comes to the large cap names. Coming to stock specific and sector specific, lot to talk about actually. Sony Z merger obviously takes the limelight. Stock Z was up about 18% in yesterday's trading session, almost 20% at one point in time. They have received approval from the tribunal court when it comes to Sony and Z merger. This was long awaited and was facing a lot of challenges. Now, as long as none of the creditors further take or challenge this judgment in the higher court, the deal will go through. And I think that is what market was celebrating. The stock is cheap from a valuation point of view, and hence there is a lot of interest in this name. Likely, as long as there is no issues when it comes to creditors challenging this name, you would see further upside on the stock easily at this level, because Sony Z would be the only challenger to Star. Of course, Star is unlisted, but Star is the largest player within the media space. But this NCLT order does pave a way for them to look at being a primary challenger to Star and take some market share away from them. So interesting story building there. As long as there is no more legal battles, I think the stock should do well. A lot of earnings that came out today. Quickly, we'll just briefly touch upon few. Some other Motherson Sumi, I think the number Samil was quite healthy. Reported EBITDA margin of about 8.6%, which is expansion of about 250 basis points. Now the revenues and the numbers could have been even better, but this quarter what happened was that the company did pass through a lot of inflationary cost benefit that they received back to the customer, which is why although the volumes are great, but the revenue numbers have not been as good as it could have been. Despite that, a good set of numbers from Samil, so stock should do well. PI Industries, again, notable numbers here. Very good earnings print, better than consensus numbers across the board, whether it is revenue, margins, or even from a bottom line point of view. That stock should also do well in today's trading session. Torrent Power, not a good set of numbers. I think the stock could be hammered in today's trading session. So just if you have trading position in there, just watch out on that name. Reported revenues of about 73 billion, which is lower than expectation, about 5 to 7% lower than expectation. EBITDA came at about 11.8%. This was 24% below expectation, and PAT was at about 520 odd crores. This was a miss of about nearly 35% to what consensus were expecting. So a bit of a concern on that stock in today's trading session. SJVN, optically the number looks a little weaker than expectation, but that is because last year, same quarter, they had a 289 crores of one-off revenue that came in, which is where the base effect is higher. So the net revenues are about 670 odd crores that they reported this quarter. Although it's down optically 33%, but it is actually down just about 10 odd percent on a YY basis. PAT came at about 2.7 billion rupees and EBITDA at about 5 billion rupees. They were also down lower than expectation, but our thesis is that if you find this stock available at lower prices, you should accumulate it from a longer term perspective. The next year guidance in terms of their power generation capacity is significantly higher than what we are currently sitting at. And the numbers for the next year would significantly look better than this year. So just accumulate these stocks as AVN if you get it at a lower level. Natco Pharma, all the numbers are in line with expectation, but don't expect any fireworks there. Car trade, one notable number which is disappointing in terms of the results. Consolidated revenue at about 861 million rupees was down about 10 odd percent on a QQ basis. My concern there is that Car Trade has announced acquisition of OLX car business at about 540 odd crores or so. But the business or OLX Auto, they have been making losses at the both at the EBITDA as well as at the net level. We do not know the quantum of these losses, but if these losses are anything above 50 odd crores, then this will be a significant negative for Car Trade as well. So this is an acquisition that was in cards. Grapevine was already there for quite a long of time. But our two pieces is that the stock will consolidate for some time before there is a clarity that emerges on the OLX integration point of view. Uniparts, again, a miss there on the estimates, but there was quite a few of one-off an inventory correction that happened. They reported 290 crores on the revenue, which is down about 14 odd percent. The stock was down quite a bit in yesterday's trading session. The management clarified that this is more of an inventory correction that has happened. It's not the demand which has gone weakening. But the concern here is that this inventory correction will also continue for the next quarter. So 1 or 2 quarters, another 3 months, you could see this stock going sideways. But fundamentally, I think over a period of 1 year or so, we are still quite bullish on the demand side of the business. We had a trading call that was open on Uniparts. We exited that. Our stop loss got hit, and we exited on that stock. Probably we'll relook at this thesis at a lower level when the stock stabilizes. From a expectation point of view, a lot of numbers today. ABB, Apollo Hospital, City Union Bank, Cochin Shipyard, Nika, Galaxy Surface, a lot of numbers that are expected today. NMDC, ONGC, difficult to cover all of them. But I think what we would be watching closely would be ONGC and NMDC, Nika numbers, as well as Astral and Apollo Hospital numbers for today. So those would be the stocks that will be in focus for from our end. I'll stop here and hand over for the update.
Thank you, Nikhil. Good morning, everyone. This is Sony from Derivatives Desk. 88 support for the on intraday basis. Nifty is holding 19,500 to 19,450. That range is very important for Nifty to hold as an intraday support. If this breaks, you can expect another 100 odd points fall. It means indicating that Nifty can actually test 19,300. Now, multiple times we have witnessed that 19,300 has been a strong support zone, and we've seen markets bounce back. But the more number of times the support is going to get tested, it will weaken over the time. So if any break below 19,300, it will cause panic selling, and you can see Nifty slide down further to 19,100 to 19,000 levels also. The reason why this panic selling can happen is because you can see the highest open interest on the put side. It is at 19,500, and the second highest is at 19,000. So there's this huge gap of 500 points when it comes to the highest open interest, which is indicating that maybe there's a good support for a broader structure. There's a good support which is lying only at 19,000. So one will have to watch these levels very carefully. 19,600 is starting its PCR OI below 0.6, so which is indicating that call writers are quite active in that strike. So your resistance of congestion for Nifty is still in the band of 19,600 to 650. So that band is very congested. It is a very strong resistance. As long as that level is not breaking, there may not be any further upside in Nifty. So you'll have to wait for those levels to break for fresh longs to be initiated. So this is for Nifty, but Nifty is still, like, out of all the indices put together, Nifty is still holding better. Now let us compare how the Bank Nifty and Fin Nifty is looking forward. So Bank Nifty futures has witnessed very aggressive short build-up yesterday to the tune of 10%. So 45,000 call is continuing to see that aggressive open interest build up, and it has highest OI of 1.35 lakh contracts for this new weekly expiry. On the put side, Bank Nifty has immediate 44,500 put, which is holding a very high number of open interest, which is 1.19 lakh contracts. So 44,500 is that key level. Although yesterday it broke, that level of 44,500, it closed mildly above it also. But today's trading session will also be watchful of that 44,500. If Bank Nifty breaks 44,500, there's a high chance that it can test 44,000 level also. So it will be very important to watch how this strike price open interest additions unwinding is taking place in today's data, which will further decide the trend, whether 44,500 will hold as a strong support or it will break. So maybe the first 1 hour trading session of today's session will help understand whether the support is to hold or it might break. If it breaks, like I've said, it can test 44,000 levels. On the upside, Bank Nifty is also having a very high congestion band of 45,000 to 45,200. So that's a supply zone for Bank Nifty. Until and unless these levels have not crossed, it is better to avoid any fresh longs on the rise. So you'll have to watch for those levels as well. If it's breaking above, then only the trend reversal may happen and we can see some further strength. So coming to Fin Nifty, even Fin Nifty futures yesterday has witnessed very aggressive short build up, almost to the tune of 6.5%. Its PCR has also fallen to 0.6, which is indicating a cautious outlook for the upcoming 14th August expiry. So on expected lines, Fin Nifty was trading in that range of 19,900 to 20,200 at max. Yesterday, it broke that range on the lower end of the range. That is, it broke 19,900 and even closed below it. With this breaking, what happened was that 20,000 call writers became quite aggressive, and yesterday's open interest in 20,000 call strike increased significantly. So it added another 48,000 contracts, making its total open interest the highest for this week's expiry, that is the 14th expiry. And the total open interest has gone up to 63,000. So it is indicating that the resistance, which was at 20,200 odd levels, it has dropped south to 20,000 to 20,050 spot levels. On the put side, immediately you can see 19,900 is still holding a high open interest of 31,000 contracts. But if that is broken, or if Nifty continues to trade below 19,900 even today, it can test 19,600 to 19,500, because your next open interest is concentrated at 19,500 with 28,000 contracts. So Nifty is sort of looking weak. If it continues to trade below 19,900, it may test 19,600, 19,500. So these are all the spot levels that we have mentioned. The immediate resistance for Nifty is now in the band of 20,050 to 20,120. So this band is going to be the supply zone or the resistance zone for Nifty. So an actionables, you can, I think Nifty has given that break of range on the lower side. So the actionable remains on the Nifty side. With the stop loss of 20,050, you can continue to sell Nifty for targets of 19,600. Alternatively, you can also buy 19,700 put for 14th August expiry, which is trading around 23. So you can buy it around 23.20. It can be bought as a U0 expiries, which in meaning that you can buy for a stop loss of maybe 0.1, and you can target for 45 to 50 rupees for this particular trade. And that's it from derivatives desk. Now I hand over the call to the next speaker. Thank you.
Thank you, Sony. Good morning, all. Jay said for the currency and commodity update. The US CPI number came softer than expected, spurring the traders to slash their bets on the further Fed tightening. US inflation number came at 0.2% on month-on-month basis, while 3.2% on year-on-year basis. US initial jobless claim came at 248,000, surpassing the market estimate of 230,000. So overall data was marginally negative for the US dollar, and thus we had seen a downtick in the dollar index after the data came. But from the lower levels, it rebounded piercingly and trimmed off all the intraday losses and managed to end the day around 102.60 levels. So it was a quite volatile day for the dollar index yesterday, and looking at the overall scenario, it is expected to remain in the range of 101.50 to 103 with a positive bias. USD INR future remained in a very narrow range in first half of the day yesterday, but it witnessed a sharp corrective move just before the spot closing, which can be a selling pressure from some banks. Eventually, it ended the day below its immediate support of 82.78 levels and form a big red candle on the daily chart. After the US CPI data, USD INR in offshore witnessed some downticks, but it again bounced back today, and thus we may see marginal gap up opening in USD INR future in today's trading day. However, we maintain our stance that the fresh buying is advisable only on a move above 83.10 on the spot. Till the time it doesn't cross that level, it's a sell on rise kind of market, but it is better to trade with the put option rather than taking undue risk by shorting future or by selling call options. On the downside, support can be seen around 82.55 to 82.60 levels. On the commodity space, gold futures saw some selling pressure from the higher levels and ended the day with marginal loss. Currently, support is placed at 58,700 level. If it breaks that support level, then it may correct further towards 58,300. On the upside, resistance is placed around 59,200 levels. While the silver future ended on flattish note and form a doji candle on the daily chart, which indicates indecisiveness among the traders. If it moves above yesterday's high of 70,700, then a bounce is possible up to around 71,500 levels. On the downside, support is placed around 69,000. Crude oil saw some profit booking from the high levels yesterday and posted a loss of nearly 1%. Currently, support is placed at 6,750, while the resistance is at 7,000 levels. Overall structure is still positive and it's a buy on dip market. So one can trade through the option. 6,900 call option can be bought in today's trading day with a stop loss of 68. And on the upside, we can see that call moving towards 200 levels. Today, the major event would be the GDP number of the Britain, which will come at 11:30. For at 12:15, a French final CPI number is there, and at 6 p.m. US PPI number is there. So that's it from the currency and commodity side. Now we are open for Q&A.